Hello, YouTubers, friends, compatriots, bootlickers, shills, debt slaves, serfs, peasants, vassals, minions. You know the drill. I'm Useful Idiot, and this morning we're going to talk about the Eurozone. And now we see the ECB, the European Central Bank, and Mario Draghi revving up for quantitative easing, Euro style. And this is an interesting timing, considering we have 5 years down the road from the economic collapse and all this talk of recovery, and trying to use places like Ireland and Greece as examples. And that ties into a recent event. Of course, we had our first bond sale from Greece, and it was fairly successful and rather shocking. But there's such a high thirst for any kind of decent yield that people will go in there and invest in the short term and hope they get out before the next leg drops. But that said, so this is going to be a drastic step, and this could easily send the Eurozone down the path of lost decades, not unlike Japan, because the debt to GDP ratios in most of these countries are already outrageous. We already have a staggering balance sheet at the European Central Bank, and they're just going to start getting this QE going. And that also coincides with the fact that recently the ECB decided to lower their standards on asset-backed securities and collateral that they're willing to take. So once again, we're going to be in a situation where a turd with a little piece of Belgian chocolate stuck to it is going to be okay for collateral. And the ECB is going to load up on a bunch of garbage, much the way the Federal Reserve in the United States is loaded up on a bunch of garbage. And we also see this continuing theme of broke banks bailing out broke governments that bail out broke banks that bail out broke governments. And this cycle continues. And this, interestingly, comes at a time as well when in March, a report came out that said that banks in the Eurozone are now more exposed to government debt than at any time since the financial crisis began, increasing balance sheets to prop up broke governments. What did I just say? Broke governments, increasing balance sheets to prop up broke governments in this broke bank, broke government partnership. And of course, that ties the fortunes of these banks and these governments even closer together, much the same way we see this closely relationship developing all over the world. Banks in the Eurozone now hold 1.75 trillion euros in government debt. And so that's for the entire Eurozone, but that's still a huge amount, equivalent to nearly 6% of bank assets. And this is according to the ECB itself. And of course, they still rate all the bonds they have on their books at AAA, even though the value has deteriorated on a lot of these. And they also have 1.7 trillion euros in non-performing loans. And like I say, they're still carrying that amount at full AAA value. So, and then on top of that, the Euro banks may need another 60 to 80 billion euros in capital reserves, according to new banking agreements. So where's that money going to come from? Especially as we still have all these deflationary forces all across Europe, and it can continue to make things deteriorate, especially on all these banks' balance sheets, because we still have huge housing bubbles unwinding in all these markets, particularly Spain. And the Eurozone only exited a 6-quarter recession in Q2, so they're only projected to have 1.1% growth next year or so. Things are not looking good for this debt situation we have in Europe. And it's not like I think they have any choice. They've already gotten themselves in this hole, and they have no choice but to keep continuing into this hole. And it could be, according to ECB's own figures, could be a decade before they clear all the banks in the Eurozone of all these bad loans. So another 10 years of these. So let's take a good look when QE comes from the ECB and see what the details are and how much they're going to buy And what's the ratio going to be? How much crap are they going to take off the hands of all these European banks? And then how much money are they going to pump into the market? And how many government bonds are they going to buy to prop up all these broke governments? And the ECB had already moved loan rates from 1% back down to 0.25%, and so ostensibly, just like in the U.S., they're passing out free money, and all this money just gets put back into government securities that yield 7% and more. So just like we have in the U.S. with all these too big to fail banks parking all their money at the Federal Reserve and getting interest on their reserves, we also have this situation where banks are given this free money, and they just plow it back into government securities that yield 7% or more. So more free money going to all these Eurozone banks and bailing them out all these years, and yet the European Central Bank still needs QE to keep this whole situation afloat. And to give you an idea, since the bailouts of 2011 and 2012, banks have increased government bond holdings by 25%. So that's in just in the last 2 years, 355 billion euros added, and this is mostly by Italian, Spanish, and Portuguese banks and governments. So these are staggering numbers, and the fact that QE is just getting revved up is going to make a very bad situation worse. Like I say, let's look at all these points that we see right now. Is that we have all the banks exposed to 1.75 trillion in government debt already, and they're going to continue adding to it at a staggering rate. And then we have massive deterioration in the bank assets that could, and it could take a decade for these banks to clear all of those bad loans. And now we have the ECB stepping in to exacerbate the situation by essentially putting this whole system on steroids. And like I say, broke governments propping up broke banks, propping up broke governments that are propping up broke banks. I'm a useful idiot. Don't you be one too.